Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over bar area 3. This is section A1. This is an application topic. Prepare the government-wide statement of net position for a state or local government from trial balances and supporting documentation. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, you're going to want to learn more, so make sure you also check out becoming a Superfast CPA Pro member. Pro members get access to a lot of great stuff, including the Pro course, where Nate explains in detail exactly how to pass the CPA exam. It's basically a much more in-depth version of the 1-hour webinar, and Pro members also get access to the full versions of these YouTube videos. So in today's video, we're only going to be going over 5 questions, but Superfast CPA Pro members will get access to a full 10-question version of the video in the member forum. So if you like this and you like our other products, make sure you check out becoming a Superfast CPA Pro member to get full access to these videos. Now with all that, let's dive straight into the questions. All right, here we are at question 1. Now, in the previous video, we talked about some general ideas behind the statement of net position and the statement of activities. So in this video, we are diving much more into the statement of net position and using multiple choice questions to learn about different pieces of the statement of net position, so that if you saw a multiple choice question or maybe even a sim on it, then you would have an idea of how different pieces of the statement of net position work. So let's dive into question 1. Something I always like to point out, even when it's in situations where it doesn't seem like it's that useful, you want to read the last sentence of a question first. This is a very good habit to be in because you have no idea what you're going to be seeing on exam day. You don't know what the questions will be. So reading the last sentence of each question first, especially when it's a big question, will typically give you context and help you know what you're dealing with in that question. So again, it's a very good habit to be in. So let's do that here. From the following trial balance amounts, what is the city's total net position? And again, a city is preparing its government-wide statement of net position. So what is the city's total net position based on what we see below? Capital assets, $10 million. Accumulated depreciation, $2 million, restricted assets, $1,500,000, current liabilities, $3 million, and long-term liabilities, $4 million. So again, what is their total net position? This one shouldn't be too difficult if you kind of just think through what you would normally think of for a balance sheet. But if you don't know the answer, that's okay. We are going to use this question to learn. So let's go ahead and dive into the explanation if you don't already know the answer. All right, here we are. The answer is A, $2,500,000. That is the amount of total net position. So let's go through this. The government-wide statement of net position reports assets minus liabilities. Again, it's basically a balance sheet. First, calculate net capital assets, and that's $10 million in capital assets less the $2 million in accumulated depreciation. That was $8 million. Next, we add the restricted assets of $1,500,000, giving a total asset of $9,500,000. Now we subtract the total liabilities, and that's the $3 million of current liabilities and the $4 million in long-term liabilities, $7 million. So $9,500,000 less $7 million is $2,500,000. So again, that is their net position. Not too difficult to figure out the net position. You just need to, again, think about this as essentially a balance sheet. It's comparing assets, liabilities, and the net position is basically the equity, if you want to kind of think about it in terms like that. So to be able to figure out what net position is, assets equals liabilities plus equity, or in this case, assets equals liabilities plus net position. So if you want to figure out what net position is, you just have to figure out what the difference is between assets and liabilities. Now with that, let's go to the next question. All right, here we are at question 2. And again, we're reading the last sentence first. Even if it doesn't seem that useful in this situation, it's a good habit to be in. Which of the following activities would be reported under business type activities rather than governmental activities? And again, they're preparing government-wide financial statements. So we're trying to figure out the difference between business type and governmental activities. Let's go through these options. Option A, public safety expenses related to police and fire services. Option B, operating a municipal golf course that charges user fees. Option C, maintaining city parks and recreational facilities. Or option D, collecting property taxes to fund general government services. So which one of these is more likely going to be a business type activity rather than a governmental type activity? Now, if you have any idea what that means, that's great. Maybe give this a pause and think about it. If you don't know the difference between business type activities and governmental activities, that's okay. We're going to learn about that right now. So let's go ahead and dive into the explanation. All right, here we are at the answer B, operating a municipal golf course that charges user fees. That would be more likely a business type activity rather than a governmental type activity. So let's go through this. Government-wide financial statements divide activities into governmental, such as public safety, parks, libraries, and general administration, and business type, such as those financed primarily through user charges and fees. Operating a municipal golf course is considered a business type activity because it is self-supporting through user fees. But the other ones, like public safety, that was option A, maintaining parks, option C, and collecting property taxes, option D, are governmental activities as they are financed mainly by general revenues such as taxes rather than charges for services. So if something in the government is kind of just, they're not really charging you for a specific service, they're just, taxing you for the maintenance of parks, taxing you for public safety like policemen and firemen, or having property taxes. Those would be more like governmental, but things like where they charge you for the bus, or they charge you for a municipal golf course, or whatever, things like that, that would be business type activities. So those are the two different types that are in the government-wide financial statements. Now let's go to the next question. All right, here we are at question 3. At what total amount should Lincoln County report these parcels of land in the government-wide statement of net position? Let's go up to the top. During the year, Lincoln County obtained 2 parcels of land. A developer donated a parcel of land to the county with a fair value of $1,200,000 at the date of donation, and the county acquired another parcel through tax forfeiture. Legal fees, back taxes, and title transfer costs totaled $90,000. The fair market value of the property at the time was $400,000. So again, what total amount are they going to report for these parcels of land in the statement of net position? Now, if you have any idea how this is treated, that's great. If not, we're going to learn some basic rules in this question. So let's go ahead and go to the explanation. All right, here we are. The answer is C, $1,290,000. That's what they're going to report these 2 parcels of land at in the statement of net position. Let's go through this. One thing I want to say as we're going through this, the rule that I have here is more of a kind of simplified rule, something that seems to be common in the questions I've looked at. So this may not be, have all of the deep details that could be in real life, but when it comes to the CPA exam, this rule seems to be a generalization that can be applied. So that's why I wanted to apply it here to make things simpler. Under GASB rules for the government-wide statement of net position, the way capital assets are reported depends on how they were acquired. Donated property is recorded at fair value on the date of donation since no cost was incurred by the government to obtain it. In this case, the donated land is reported at $1,200,000. Property acquired through forfeiture is treated as acquired property. For these, governments record the asset at the lower of cost or market value. And that's the thing that I was talking about. There's situations where it's not 100% of the time lower of cost or market value, but as far as the CPA exam goes, this seems to be what you're going to be tested on most of the time, if not all the time. Lincoln County's cost to secure ownership was $90,000, and that's legal fees, back taxes, title transfer. The fair market value was $400,000. Since governments use the lower of the two, the property is recorded at $90,000. So add the two together, the $1,200,000 and the $90,000, and that gives you $1,290,000 of assets of land that they're going to be reporting in the statement of net position. So again, this has a basic rule. I'm sure if you went and looked up some things in like the actual GASB rules, there's a little bit more detail. But as far as the CPA exam goes, this seems to be how you'll typically apply it. With that, let's go to the next question. Okay, here we are at question 4. What amount of interest expense and interest payable should Metro City report at December 31st, year 1? Let's go up to the top. On April 1st, year 1, Metro City issued $10 million of general obligation bonds at par with a stated interest rate of 6%, payable annually on October 1st and April 1st. The city prepares its government-wide financial statements on December 31st. So again, what interest expense and what interest payable are they going to report at the end of the year? So pause the video, think through this. If you watched the previous video, that might give you a hint as to how they would treat this, but if not, that's okay. We're going to look at the answer here in just a second to start learning. All right, here we are. The answer is D, $450,000 interest expense and $150,000 interest payable. So let's go through this, and basically this is just normal accrual accounting. So let's go through it. Government-wide statements use the accrual basis of accounting. And again, we talked about that in the previous video. That's why I was talking about that. Just like GAAP. That means that interest expense is recognized as it accrues, not just when it's paid. The bonds are $10 million at 6% annual interest. So that's $600,000 of yearly interest, or $300,000 every 6 months. And we were told that every 6 months is when they make the payments. First interest payment, October 1st, covering the 6 months from April to October. By October 1st, Metro has incurred 6 months of interest, so that's $300,000 of interest because it's half of the year's interest, which was paid on that date, so no payable remains from that portion. They've paid the full amount, there's no payable from that. Next interest period is from October to April, and that's going to be partially in year 1, partially in year 2. By December 31st, 3 months of that 6-month period have elapsed from October, November, and December. That means $150,000 of interest has accrued, and that's, $300,000 from the 6 months multiplied by 3 months because it's half of the 6 months. So that's $150,000. So as of December 31st, the interest expense was the $300,000 from the first payment, and then the $150,000 that's been accruing in October, November, and December of this year to be paid in April of year 2. And then the interest payable is still the $150,000 because that's unpaid. And remember, because this is accrual basis accounting, we are counting that interest expense even though, that hasn't necessarily been paid yet. So interest expense is the $300,000 plus $150,000, and the interest payable is this same $150,000 because they're counting it as an expense, but they are accruing it to pay it later on. This shows how accrual accounting applies to government-wide financial statements. Interest expense builds up month by month with a payable recognized for amounts incurred but not yet paid. So just like accrual accounting, if you've seen that in FAR or something else maybe in your daily job, then that should make sense to you. Now with that, let's go to the next question. All right, here we are at question 5. How should this repayment be reported in the city's government-wide statement of net position? Let's go up to the top. During the year, Oakwood City repaid $1 million of general obligation bonds, and that's the principal, from general tax revenues. So they're repaying the principal, which was the $1 million. So how should this repayment be reported? Is it going to be an expenditure, an expense, as a reduction of bonds payable, or not reported since it was from general resources? Pause the video if you want to, if you have any idea how this works, but if you don't know how it works, that's okay. We are using this question to, again, learn. So let's dive into the explanation right now. All right, here we are at the answer C, as a reduction of bonds payable of $1 million. So let's go through this. In government-wide financial statements, which follow the accrual basis of accounting, we just talked about that, repayment of long-term debt principal does not appear as an expense. So the principal repayment does not appear as an expense because this is normal accrual accounting. Instead, it decreases the outstanding liability on the statement of net position. Here, Oakwood City's repayment of $1 million reduces bonds payable by that amount because it did say specifically that $1 million that was being repaid was the principal. Only the interest portion of debt service would be reported as an expense in the statement of activities, and we will be talking about the statement of activities in the next video. By contrast, in the governmental fund financial statements, and again, we'll talk about fund financial statements in a future video, the same repayment would be reported as an expenditure, and you maybe have heard that word before. That's very specific to fund financials, since funds use modified accrual and don't carry long-term liabilities. And again, we'll talk about that in a future video. So with that, we learned how repayments of debt are handled in the statement of net position. Essentially, they reduce whatever they were connected to. So in this case, they reduce the bonds payable that were related to the general obligation bonds. Now with that, before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 or maybe even 4 questions trying to teach you about the different pieces of the statement of net position or how to calculate net position or whatever the case is. These are the things that you're noticing throughout the questions, the things that are popping up the most. And so you take your time to write these out in your own words as the pillar topics. And as you are doing this each day, you are building your own personal repository of the most important things you need to know for the exam based on what you learned from the questions. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just dive in. Government-wide statements use accrual accounting. Assets, liabilities, revenues, and expenses are recorded when they occur, not just when cash changes hands. And, that's pretty normal. That's similar to GAAP, so that should sound normal. Net position includes capital assets, net of depreciation. Purchased property is reported at cost, donated property at fair value, and forfeited/acquired property at the lower of cost or market. And again, we are not going to dive super deeply into a lot of the nuances for property. Just know that, donated property, fair value, forfeited/acquired property, typically at lower of cost or market. There might be other rules that you could know from real life or from the actual GASB. But as far as the CPA exam goes, from what I've seen, that's typically what you'll be seeing is kind of those general rules that right there that I just mentioned. Governmental versus business type activities are reported separately in the statement of net position. Governmental activities are supported by taxes, like police or parks, while business type activities are supported by user fees, like utilities or airports. Now let's talk about interest expense, and this should make sense just like in the first pillar topic. Interest expense accrues over time. Even if bonds pay interest semi-annually, governments must record both interest expense and interest payable for the portion of interest that has built up but not yet been paid because, again, government-wide financial statements use the accrual basis of accounting. And then finally, debt repayment reduces liabilities, not expenses. In government-wide financials, paying back bond principal lowers bonds payable on the statement of net position. Try to say that sentence 5 times fast. Paying back bond principal lowers bonds payable. Anyway, while only the interest portion is recorded as an expense. So with that, we've gone over the pillar topics and the first 5 questions for this video, just the basic general ideas that we learned from those first 5 questions. Now remember, in this YouTube version of the video, we are only doing 5 questions, but SuperFast CPA Pro members will get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other videos, make sure you check out becoming a SuperFast CPA Pro member and you'll get access to the full versions of these videos and a whole bunch of other great stuff as well. Now, the easiest way to learn about and become a SuperFast CPA Pro member is by going to superfastcpa.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that again, that will give you a better path to learning about and becoming a SuperFast CPA Pro member. So check out the webinar, check out becoming a pro member. If you found this video helpful, make sure to like it and leave a comment. I hope it was helpful, and I will see you in the next video.